Hello everyone, welcome back to the Road to Retiring channel. I hope you're doing well. Today I'd love to speak a little bit about Edwards Lifesciences and exactly why I love this company so much. If you do enjoy this kind of content where I value stocks and look at what the future price of it could be, please do drop the video a like, subscribe, and let me know in the comments down below any other stocks that you're interested in hearing about. So to get into Edwards Lifesciences, before I go into exactly why the financials behind this are so impressive, I just want to introduce you to what the company does if you haven't heard of them. So as you can see, they're a global leader in the patient-focused medical innovations for structural heart disease and critical care monitoring. Their life-saving innovations treat advanced cardiovascular disease, and they're sold in approximately 100 countries. So this isn't just one country focused. If there's issues in one country, this isn't going to impact them horrendously, as they have that well diversified customer base, and you can see that over 95% of their sales are from products in leading positions, so they have that competitive advantage over their competitors as well. Now they have extensive manufacturing operations in North America, Europe, Singapore and the Caribbean, so again it's just really nice to see that diversified operational activities, so that if there are problems in one of the countries they have operations, this isn't necessarily going to have drastic impacts on the business because they have these operations in different areas of the world. Now you can read a little bit about what their major product lines are on the right here, but I just want to go over why they're poised for long-term success, because this is what we're interested in as investors. Now they say they have unwavering patient-focused culture which motivates and guides their global team, a differentiated strategy based on focus, innovation and leadership, credibility and trust with clinicians, regulators, payers and patients, and again that just comes into that competitive advantage again, which I think is really nice to see. And their transforming patient care drives growth and secures bright future. So as I said, super really nice things to see there, and I want to go into the valuation of it a bit. So if we look at the earnings, you can see if we put to annual, there's super steady and impressive growth here, and I really love this because it's not a case of 2017's high and then 2018's low. Pretty much year on year it's increasing by a steady amount, and you can see that this has rose from $0.76 per share in earnings up to $2.48 in earnings in 2022, and this growth isn't expected to slow down. This is expected to go all the way to $3.74 per share in earnings in 2026, and it's so steady you could almost put a ruler on this. Now along with earnings, we also like to look at the revenue. We want to see that a company is able to consistently improve and grow its revenue, and Edwards Lifesciences can do this. If we look at the revenue annually, again 2015 $2.5 billion in revenue, 2022 over double at $5.38 billion in revenue, and again this is expected to continue growing into 2026 at $8 billion. So just super great growth rates there, and along with the earnings and revenue, we like to see growth rates in equity and cash flow. So to look at the cash flow quickly, we can see that there actually was a drop in 2021 to 2022, which can be a bit worrying at first when you see the cash from operating activities fell from $1.73 billion in 2021 to $1.2 billion in 2022. But when we look at this in a little bit more detail, you can see the funds from operations and the funds that their operations are making actually increased from 2021 to 2022 from 1.59 billion to 1.64 billion, and it was only because this change in working capital, which is really sporadic and never sort of consistent. You can see this was minus 400 million in 2022, and this is what caused the cash from operating activities to fall to these levels, which wouldn't usually be the case, as the funds from operations are things we want to see growing more. That it would be more worrying if this is what caused the cash from operating activities to fall. So I'm still pretty confident with that growth, and if we look at the funds from operations growth, that's gone from 600 million in 2016 to 1.64 billion in 2022. So there's really nice growth there, which is the main driver behind the cash from operating activities. So I still feel pretty comfortable with that cash from operating activities growth. Lastly, I like to look at the equity growth, and if we look at this, let's get rid of the funds from operations from the chart. Look at the equity, you can see again just really nice steady growth from 2.6 billion in 2016 up to 5.8 billion, over double in 2022. And yeah, they're increasing both their assets and liabilities, but they're increasing their assets at a faster rate, which is exactly what we want to see. So as I say, fantastic growth rates with this company. And if we look at the overview, along with these great growth rates, you can see the profit margin is increasing. The orange bar, or the orange line here, as you see on a general trend, is increasing, which was 19.4% in 2018, up to currently sitting at 28%. So again, really nice to see that increase in profit margin. And alongside this, their debt level and coverage is super nice. There's no sort of worry about their current financial situation. Their debt is actually less than their current cash, and their debt is less than 1 year of free cash flow. So that can be covered off super easily. So there's no worry about sort of imminent financial trouble. You can see in the short term and the long term, their assets and their assets in the short term and long term are over 3 times higher than their liabilities in both situations. So again, really, really comfortable financial position from them. And lastly, a thing I like to look at to see that a company is management are investing funds efficiently is their return on invested capital. If we look at the statistics, you can see the return on invested capital I typically like to see above 10%. This was 17% in 2016. The lowest it's ever been is 16.4% in 2020. And if you look at how it's just sort of stayed at these levels and even increased, it's currently sitting at 23% in 2022. So really, really stable return on invested capital and nicely above that 10% benchmark I like to look for. And that is all broken down into this first sheet here. You can see the total compound annual growth rate across all those metrics is great. Return on invested capital is fantastic, and there's no worry about that imminent financial trouble because they can pay off their long-term debt 5 times with their free cash flow within 3 years. So just as I say, just super really comfortable in financially, and this is exactly why the company looks so great. Now I want to go into my valuation for the company now. So currently it's trading at $81.91 per share, and there's a 5-year estimated compound annual growth rate in earnings for 10.45%. Now because the realistic growth rate is so high, it's 21.74, I'm comfortable with this analyst 5-year estimate, and that's what I've gone for in my earnings growth rate here. I've gone for a 9.5% discount rate as there is no dividend with this stock, the 10% margin of safety because the financials are so impressive, and I've gone for a minus 1.5% share dilution, as if we look at the total common shares outstanding, you can see that in the last year they started accelerating their buyback process as they bought back a few from 2016 from 634 million to 624 million in 2021, buying back 10 million in that 5-year period. They've really started to accelerate this, and last year they bought back 16 million more from 624 million to 608 million in 2022. So they are accelerating this buyback process, so I've gone for a share dilution of minus 1.5%. Now in terms of earnings per share, currently 2023, $2.52 are expected, and I've gone for a price over earnings multiple of 25 when we're looking at this price over earnings fair value calculation. Now 25 seems high, but valuations are where Edwards Lifesciences really starts to struggle because it is such a fantastic company. This means that people want to own it and are buying it really high above the sector median levels in terms of valuations. So as you can see, the current Edwards Lifesciences price over earnings is sitting at 33.57 and the sector median is at 24. Now their 5-year average is at 51, which is super high, not levels I'm comfortable with, and I think around that sector median level of 24 still seems quite high. So I'm happy to go with the sector median level, but this is really high for a sector. Now in terms of other sectors can be a lot lower, so I'm happy to go with that sector median, but as it's high, I'm going to go around that level at 25, and that brings us a fair value for Edwards Lifesciences of $63.85 with a 2028 price prediction of $111.68. So there's still quite nice growth there from the $81.91 market price right now to that 2028 price, but if we really want to see the returns that make this investment worthwhile, then we're hoping that it will drop a bit more based on the price over earnings calculation. We look at the price over sales, we've gone for that revenue growth rate of 11%. This is in line with what the analysts expect, from 5 billion or 5.86 billion in 2023 to 8 billion in 2026. As you can see, that's what we have laid out in our model here, from 5.8 billion to 8 billion in 2026 at 11% growth rate. And we've gone for a price over sales multiple of 7. Now, their price to sales multiple was really steady around the sort of 6, 7, 8 levels between 2012 into 2016. But since then, it's been consistently rising, and I don't really feel comfortable with the levels it reached, and we have seen it start to drop. And so I think around those levels where it was very stable, around 6, 7-ish, the levels I'd feel a lot more comfortable at. So that's why I've gone for a price to sales multiple of 7. And based on that, the fair value for the sales, price to sales fair value calculation is $70.25 with a 2028 price of $122.89. So again, there's some quite nice returns there from the current price $81.91, but we'd just be looking for the price to drop a bit more before we really become interested in buying some of this stock for ourselves. But it is one we really want to own, so to see that it dropped around these prices would be great if you're not an owner and you want to get in. If you are an owner, then I'm sure you don't want to see it drop to these levels. Now, price over operating cash flow fair value calculation, we've gone for growth rates which will give us a value sitting just over that net income when you take into account things like depreciation, and we've gone for a multiple of $20. Now, you can see the price to cash flow multiple, theirs is currently sitting at 40, which is super high. The sector median's at 17.96. I do think there's a slight premium with Edwards as it's such a fantastic business and people want to own this. But with the growth rate somewhat slowing down slightly, I would feel more comfortable with levels closer to the sector median at around the $20 mark, or 20 price over operating cash flow multiple. And that brings us a fair value for the price over operating cash flow of $57.19. Now, when we take all of these together and we look at the average based on all three of these calculations, this is a $63.77 average fair value that you want to buy at to get the sort of growth you want to see and return on your investment you want to see when you're buying a singular stock like this. And that brings us an average 28 price of $111.54. So again, by no means is it a sell. I think it's going to increase, and then further on 2028, hopefully it continues to go up and up because it is such a fantastic business. But again, I'd just like to see it drop that slight bit more around to the $63 level. Maybe if it starts to get close to that, around 68, 70, I become interested and just buy because I just really want to own this company. But I'd definitely be looking for it to drop a bit more before I buy some of this myself. I hope that you found this interesting, and please do let me know if you like Edwards as a company. As I say, drop any comments down below for any other stocks you're interested in hearing about, and please like and subscribe if you enjoyed the video. But for now, it's been Road to Retiring. I'll catch you in the next one. Bye guys.